How to read the charts in under 3 minutes. Today we're going to be talking about the moving averages. On top you could see the yellow line. This yellow line represents the 5-day moving average, and down below we have the magenta line. That's the 20-day moving average. These two are technical analysis indicators. They smooth out price data to help identify trends. The numbers 5 and 20 refer to the amount of days. The yellow, the 5-day moving average, is the average price over 5 trading days. The magenta, the 20-day moving average, is the average price over 20 trading days, which is 1 month time. How do we use the moving averages? They help determine the trend. When price is under the 5-day moving average, price is bearish. When price is above the 5-day moving average, price is bullish. And every day you can see how much we use this in the Discord community. Just today, for example, the 5-day moving average is resistance, and you could see the 20-day moving average is the defensive line. The bulls are defending this level at the 20-day moving average. So that helps you in setting your expectations and taking your trades for the day. Once we add our algorithms, it helps you identify the patterns. Just like a football team has lanes and patterns that they run. Every day we identify the algorithms, which are the patterns and the lanes that the bulls and the bears are running. This helps you take a trade with good risk to reward and set your profit targets as well as your tight stop loss.